All right, today we're going to talk about one of the most maddening experiences in all of trading. You know that feeling when the market seems to have it out for you personally? Well, we're going to tear down that common myth and replace it with a much more powerful and, frankly, logical way of understanding how markets actually work. Let's dive in. Oh man, we've all been there. We've all said this. You've got a great setup. You place a totally reasonable stop loss, and then you just watch in horror as the price spikes down, hits your stop to the exact tick, and then immediately snaps back in the direction you wanted it to go. It feels personal. It feels like a setup. So, here's our roadmap for today. We're going to start by unpacking this stop hunt myth. Then, we'll get into the reality, which is something called liquidity raids. After that, we'll figure out how to tell a raid from a real breakout. Super important. We'll talk about the mindset shift that comes with this knowledge. And we'll end on the most important takeaway. Price hunts liquidity.
Okay, so let's start with what most of us believe, or at least what it feels like is happening when we're in the thick of it.
You know, the common story goes something like this, right? Big banks, hedge funds, they can see my little individual stop loss, and they are actively pushing the price around just to knock me out of my trade. It's this belief that the whole market is rigged against me, personally. It's a really emotional way to look at the markets, and honestly, it takes all your power away.
But here's the first big reality check we need to make. The big institutions, the players moving serious money, they genuinely do not care about your $100 or even $1,000 trade. They can't even see it. What they can see and what they absolutely care about are the giant pools of orders that build up when thousands and thousands of traders all put their stops in the same obvious place. That's the target.
And that brings us right to the heart of the matter. This isn't some personal attack, it's not malicious, it's just a fundamental mechanism of the market. And it's all about one thing, and one thing only, liquidity.
This, right here, this is the light bulb moment. The market isn't hunting you, it's hunting liquidity. Just changing that one word, that one perspective, shifts everything from this emotional conspiracy theory to simple, cold, hard logic.
So what exactly is a liquidity raid? Well, it's pretty simple. It's when price makes a deliberate move into a well-known area where tons of stop-loss orders are sitting. When all those stops get triggered, they turn into forced market orders. A whole bunch of people are forced to sell or forced to buy all at once. And the big institutions, they use that sudden burst of orders as fuel to get their own massive positions filled. You know, looking at it this way really changes everything. The whole stop hunt myth feels personal, like some kind of revenge plot. It feels malicious. But the reality of a liquidity raid, it's structural, it's efficient, and it's purely mechanical. It's just how the engine of the market works.
And this explains perfectly why we see those long, nasty wicks on our charts all the time. I mean, think about it. Where does everybody place their stops? Just above a clear resistance or just below a clear support? So for the market to get its hands on that big pool of orders, price has to go there. Those wicks you see poking above highs or below lows, they're not fake moves. They are targeted, brutally efficient liquidity events.
Okay, this is it. This is the million-dollar question, right? If price breaking a key level can be a trap, but it could also be a genuine move, how in the world do you tell the difference? Let's get into it.
Exactly, because not every breakout is a fake out. We need to be able to tell them apart because one is a trap that's going to cost you money, and the other is a fantastic trading opportunity. Getting this right is a total game changer.
A liquidity raid, it kind of has its own personality. It usually happens really fast. It's a sharp, aggressive spike. Its whole purpose is to create an emotional reaction, to make you panic or to give you major FOMO. But here's the key. It has no follow-through. After it grabs all the stops, it just as violently snaps right back into the range it came from.
Now, a real breakout looks totally different. It often happens after liquidity raid has already cleared the way. You'll see new buyers or sellers step in, happy to trade at these new prices. Instead of snapping back, the price will hold above that old resistance or below that old support. And then it starts to build a new structure, confirming that the move is legit.
So the most important thing to remember is this. Don't get fixated on the candle that's breaking the level. That's the trap. The real information, the real signal, is in how the market reacts after that liquidity has been grabbed. Does it slam back down, or does it accept the new price and start building from there? That's everything. When you start to see the market this way, as a mechanical process, it completely changes your relationship with it. You stop feeling like the victim of some grand conspiracy, and you start acting like a calm, detached observer just watching the mechanics play out. And this new mindset leads to some very real, very direct changes in how you trade. For one, you stop putting your stop loss in the exact same obvious place as everyone else. You stop chasing that big, exciting breakout candle. Instead, you learn to be patient. You actually wait for the raid to happen, and you look for your entry after the market has shown its true intentions.
Now, a quick but super important note on context. Liquidity is everywhere, on all time frames, but they serve different purposes. Raids on the lower time frames, they create a lot of noise, a lot of traps, and some short-term entry signals. But it's the liquidity on the higher time frames, that's the stuff that has real weight. Those bigger pools of liquidity are what control the market's overall direction.
Okay, so as we start to wrap this up, let's just boil this all down to the single, most important, most transformative idea.
Here it is. Stop hunts aren't real. They're an emotional story we tell ourselves. Liquidity raids, on the other hand, are a structural reality of how markets function. Price isn't attacking you, it's efficiently seeking out orders. And once you truly deeply understand this, the chart stops looking like a chaotic, emotional battlefield and starts looking like a logical, mechanical puzzle.
So if you remember nothing else from this entire explainer, please remember this. Price doesn't hunt you, it hunts liquidity. Understand where that liquidity is, and you can stop being the fuel for the fire and start trading with the flow of the market.